So, good morning, all of you. I welcome you all back to today's briefing session. My name is Anurag. I'm the Senior Client Success and Learning Manager at BMN Capital, and today we are going to start the briefing session. So, first, we're going to discuss that what the economic calendar and data events for today telling us and how to plan our day. And this is the second day, and we have seen the surprise into the market after the latest NFP data release, which happened yesterday. Now, let's see that what are the crucial and the most important data events which are still pending to be released, which have everything into it to shake in the market. So, let's discuss this. So, without wasting time, let's start with the economic data for today, right? So starting with the Asian session, in the Asian session, we have the Bank of Canada summary of deliberation. Then we have the monthly budget statement, right? So we have seen the monthly budget, it's still in negative, which is not a very surprising thing. But yes, we have seen a kind of improvement. Previously, it was in negative 145, the deficit, and now the deficit have improved, right? And it almost improved by 50 billions, right? So it's a good sign for the dollars, and that is the reason we are seeing the weakness in gold and silver. Now come to the Japanese part. So the PPI figure we have seen previously, it was 0.1%, 0. So nothing is very interesting into this data. There is no factor involved which will bring surprise into the market. Then for the Australia, we have the consumer inflation expectation, which have improved, right, with a few points. And we have lots of data related to the GBP, and the most important one is the GDP, which is on year basis. So the previously it was 1.2%, and right now the figure is showing a 0.7%. That means the GDP is not showing very good numbers, and the economy is slowing downwards. Now, these are the data which are still pending to be released, right? So in the London session, we have the IEA oil market report, which will have an impact on the oil prices, right? Then we have the gold production, which is on year basis. So we have to have a look, right? So previously it was in negative, and if it is still in negative, that means it will bring limit to the downside movement into the gold. Same is the mining production data, which we have to see. And this data is not only impact the gold or silver prices, but it also going to impact the other minerals like the bauxite, aluminum, copper, right? Then we have the inflation rate for the India. So because India is one of the biggest buyer of gold and crude oil, so we have to see this data also. If inflation is rising, it's a negative, it will have a negative impact on the demand of gold, right? And as a result, gold prices will not going to sustain its rally for the upside. This data is telling me. Then we have the most important data for today in the US session is the initial jobless claim. We have seen a sudden spike in the job creation in the NFP data. That means a lot of job have been created. Right now, we have to see this data. Then comes the existing home sales data, and I repeat again and again that this is the data which is the leading indicator for the market, especially if you are trading into the dollars and if you're trading into any dollar pair, right? So just to have a quick sneak peek, so the GBP, UK GDP we have seen, and the production figures also. So the growth is stagnating and the business investment is falling sharply. So this is not a recession yet, but it is economic fatigue and it is bad for the GBP. And weak growth equals to Bank of England is not going to cut the interest rate, so there is no rate cut expectation rise, right? So it's a negative sign. So GBP is vulnerable on rallies, so be aware, right? Then comes to the US labor market data. So we have seen that in the, initial jobless claim, the expectation is for triple 2K, right? Previously it was 231K. So still they are at a historically low levels. What this means is that US labor market is not cracking yet, but yes, Fed does not need to rush the rate cuts, and as a result, US supported unless claim spike unexpectedly. That means USD is going to sustain its level. Moving with the Australian data, which we have discussed, how the market have reacted. So although this is not that important, but yes, even if CPI cools, if expectations rises, RBA stays cautious, right? So odd may find short-term support, right? If it is falling right now. For the Japan PPI, it is stable. So JPY is still driven more by the global yields than the domestic data. Then the EIA report, which I've talked about related to the oil, is very important because this is directly related with the volatility, right? So if demand outlook cut, oil will move downside. If supply tightens mentioned in this report, then the breakout is possible towards the upside. Now, how all this data is going to impact the gold market symmetry. So gold today depends on three important things. First is the USD reaction to the jobless claim, then the bond yields because we have a lot of short-term bonds auctions also today. Third is the risk sentiment from UK weakness, right? So because GBP is not showing very good numbers, right? And we have the London bullion market uh, situated in UK. So this will have an impact. So overall market biasness is today, if I talk about, so for USD slightly bullish, labor market should stay stable. Then for the GBP bearish on rallies, that means wait for the prices to rise, then you'll find a very good sell side opportunity. For the gold, neutral to cautious, waiting to USD. So after this data release, you will find very good movement in gold. For the oil compression, that means high probability of a sideways movement till this data is not being released. For indices, it's almost mixed, and whatever is the current prevailing trend, they are going to follow the same thing. Now come on to the last segment of our report, last part of the report, that is the technical chart. So let me share you my screen. So over here, although this is the euro odd pair, which is rising right now, which is an indication that the Australian currencies are getting weaker. But yes, we start our day with the gold, and over here we can see that market is moving sideways, right? And if I try to identify the market structure, so without any uh, problem, right? Anybody, any human, I can easily identify that yes, it is trading in a channel, right? And that channel is ascending. That means it is slighted towards the upside, right? And when this kind of formations happens in the market, probability of a downside break is quite high. So what would be my suggestion, that wait for the prices to go up, right? And maybe in the mid or after the London lunch break, a high probability that we might see the prices going downwards. There will be a sharp fall. Again and again, I'm repeating the same thing because the commitment of traders data is also telling the same thing, because the hedge funds have created a very large number of longs, but the prices are not supporting this. And this is called as stress, right? This is called court stress. And in simple terms, it is telling you that whenever you find market prices are going upwards, it is not going to sustain for a very long period of time. Any sign of weakness is a very good opportunity to create sell side positions, right? So today also I'm waiting for the same. If I talk about yesterday, just before the release of the NFP data, we have seen this three strong candle on a hourly time frame, and all of a sudden in the very next candle, we have seen that prices have fallen below, right? And this candle have made the low of the day, and today neither the high nor the low have been taken. Still, the market is trading sideways. So, a lot of liquidities are resting at the high and low. So if prices breaks the high and take a U-turn, it's a very good opportunity to take the sell call. Moving on to the next segment, that is the silver. So yesterday I haven't recommended short side positions, and still I'm holding that short positions. Market is moving sideways. The upside rally, or if I see the market symmetry is not looking that promising towards the upside. So the probability that yes, weakness might come if we see the current swing. So this is the swing which market have made right now, and the next move, high probability that it will make a new swing, and I have drawn this trend line on the by taking the high, right? So this descending trend line will act as a strong resistance. Any sign of reversal is bring more bearish pressure into the silver. Then comes to the US oil. So this is on a H1 time frame. Yesterday we have seen oil prices spiked, and then we have seen the exhaustion and prices went down. Now neither the high neither the low have been taken. Still the market is moving sideways. So the picture is not that clear. So we are waiting for the IEA report to be released, and after that there will be price movement into the prices. But yes, on H1 the things are not looking that clear, and I've drawn this symmetrical triangle, and I'm still waiting that yes, if prices really wants to go up, they need to take a correction toward the downside, right? Although they have generated a upward trend line which is going to impact the psyche of lot of retail traders towards the upside. So probability is that prices might go up, test the this high of the previous swing high, and then we have a sudden fall into the prices. So again, for the silver also, I'll wait for this. Second thing, which is more promising, is that we have a fair value gap and an order block sitting at the height, right? So this will be the area from the where you can find prices will take a sell call. So I'll wait for the prices, right? I'll have my patience, wait for the prices to reach this level, and once the weakness came, I will create my short side positions in the US oil, right? Yes, and I take the reference from the IEA report also. Now comes to the Euro USD part. First, have a look on the GBP USD. So we have seen the data. So on a very bad data, the GBP prices have reacted very good, and I have discussed that any upside movement is not going to sustain because the numbers are not supporting the GBP, especially the GDP data from the Great Britain, right? So high probability we have seen the exhaustion, right, of the this is the Asian high, right? This is the first high which have been made in the Asia, right? Prices try to go up. We have seen a very good exhaustion in the candle, and right now this is the first candle of the London session. So I'm waiting for the prices that high probability prices might take a corrections toward the downside, right? So I wait for the prices, and if prices get a U-turn above the Asian session high, I will think of taking a sell call, right? Because USD is getting stronger, so I need to have in focus, right? We are not discussing the DXY, but from now onwards, we'll take into consideration the DXY chart also. So have an idea that what dollar is telling us. But yes, for this, the probability is that prices might turn back, take a U-turn towards the downside again, right? Same is the case with the Euro USD. So Euro USD have fault, right? And this red line and this blue line marks this triangle formation, right? After that, we have seen a very strong candle toward the downside. Prices have taken the correction and right now moving sideways, right? So if prices get a U-turn from here and again came back below the low of this candle, taking a sell would be very good. And if prices successfully again came back into the zone of this channel, then biasness would change and we think of taking a buy call, right? And over here I've marked a small this channel have been breached right now, right? This broadening wedge, and right now price at the top, right? So for the next 48 minutes I'm just going to watch how this candle is being forming. If I see any kind of rejection, right, exhaustion in this candle, or hammer or hanging man kind of formations in the very next candle, as soon as the next candle break the low of this candle, I am going to take a sell call, keeping my stop losses above the high of this candle, right? Now, towards the next segment of the market, that is the indices. So for indices, we'll take the US 30. So it's quite choppy, right? And majority for the last few days, especially into this week, we are seeing the movement coming in the very late US session, right? So till the time, I would not suggest you to take any calls, right? Wait for the US session because we have this labor market data, and labor market data is going to impact, including the housing data, is going to impact the indices. So I wait for the prices, right? And if I find the common things, right? What are the common observation which I can identify with the chart. So after the 13th candle, I'll see a very good volatile movement every time. See, this is the 13th candle, right? Prices fell down. This is the 13th candle, prices have risen, right? This is also the 13th candle, prices went down, then again went up. So it's better till the whatever is the current trend, it's going to sustain till the 13th candle. But yes, if you want to catch really very good points into this, wait for the US sessions 13 candle, and after that you'll get a clear picture, right? And you can take the trade into that direction. Although if I combine this data, right, and make it smaller to identify that in which direction the prices are showing me strength. So from here, the prices have been spiked very aggressively towards the upside. And still, if I talk about, if I take this high of this candles, right, which is the previous week's high, so prices are still holding its ground above this high, which is an indication that buyers are still pushing the prices toward the upside, right? So yes, in the US session, it's a probability that prices might go down. Then we have the 13 candle, and all of a sudden prices again spike back up, right? If this is not going to happen, then the second scenario will be that instead of testing this level, prices went up. We find a 13 candle over here, and then we have a sharp fall towards this area, right? So this will be the projections for today for the US 30. Now in the last segment, we have the BTC USD. So I've been shorted BTC USD, right? And I'm still holding the sale positions, right? In one position, I booked the targets, right? Still, I have two remaining positions, and I'm still towards the sell side. Although over here, prices have been pushed, and right now they have shown this trend that might be this base which they have created, which they have designed, might act as a very strong base, and prices may get a rebound from this levels. But looking at the today's price actions continuously, we have seen lot of exhaustions into the green candle, which is an indication that bears are quite aggressive right now. And then the current candles, if I talk about, the size of that candle is showing that there is indecision into the market. But let me clear it that the probability towards a downside correction, it's still very high. Prices might came back at the level of 66463 level, and from this level, if again prices get the support towards the upside, I book all my sell positions and convert my biasness towards the buy side. But I want prices to test the level which I've given you, and then I want candles which will show me the strength towards the upside. Then only in that case I'm going to change my biasness. Now we have done for the today's sessions. We have discussed all the market segments along with the important fundamental and macroeconomic developments. So that's all for my side. I hope you have enjoyed today's sessions, and this session have given you the clarity that how you're going to plan your day for each segment, right? The important data, just to conclude this, the most important data is the initial jobless claim and housing pricing data, which will bring lot of volatility into the USD pair, indices, and our favorite gold. So that's all for my side. This is Anurag signing off for today. We'll meet again tomorrow at the same time. Till the time, have a great trading day ahead. Thank you. Bye bye. I request all of you to kindly leave the Zoom meet room. Thank you.